Retail investors are pouring billions into stocks. Tech giants are building energy-hungry data empires, and countries are adding Bitcoin to their reserves. If you're not paying attention, you could miss the biggest wealth shift in decades. Let's dive in. The question is, what does all this mean for Bitcoin, the stock market, and your wealth? Are we on the brink of a new financial era or just a calm before the storm? Let's break it all down. What's up, family? It's Coach Massey, and you're locked in to the Daily Hodl. If you're here for Bitcoin insights, macro financial news, and strategies to protect and grow your wealth, make sure you hit that like button, subscribe if you haven't already, and share this video at the end with someone who needs to take care of their own finances and be ahead of the curve. Remember, this video is for educational purposes only. It is not financial advice. Always do your own research before investing with your money. Let's begin with retail investors. Over the past month, Americans poured an astonishing $105 billion into U.S. stocks, making the largest monthly inflow in history. That is a number that demands attention. It signals not just market optimism, but a significant shift in where everyday investors are placing their confidence. Why now, though? Could it be the Fed cutting rates? A major factor is falling interest rates from the Federal Reserve. With high-yield savings accounts offering minimal returns, cash sitting idle is no longer attractive. Investors are looking for alternatives that can preserve and grow their wealth. That's where Bitcoin enters the picture. Its scarcity, decentralized nature, and independence from traditional monetary policy make it an increasingly appealing option for those looking to diversify beyond conventional assets. I'm all in on Bitcoin. Let's also show mortgage refinancing also plays a role. As rates gradually drop, homeowners have the ability to pull equity from their homes and redirect it into investments, stocks, ETFs, and increasingly, yes, Bitcoin is the natural destination for this influx of liquidity. This is more than just short-term market activity. It is a clear macro signal. When retail investors move massive amounts of capital into markets like this, it reflects both confidence in risk assets and growing awareness of alternative stores of value like Bitcoin. The trend is unmistakable. I hope you're paying attention. As traditional returns shrink, Bitcoin is emerging as a go-to asset for wealth preservation and strategic growth. Next, let's dive into the landscape of corporate finance. Major Mag 7 companies, Alphabet, Amazon, Meta, and Microsoft, they have collectively committed an astonishing $800 billion towards building new data centers this year alone. Data centers are quickly becoming the new oil of the digital age. They consume vast amounts of electricity to power cloud computing, artificial intelligence, streaming services, and now even cryptocurrency infrastructure. This unprecedented demand raises a critical question. Can the world generate enough electricity to keep up with this rapid expansion? Here's where Bitcoin enters the picture. Cryptocurrency mining is no longer just about individual miners. It's becoming intertwined with corporate energy strategies. Many mining operations are now partnering with renewable energy projects, industrial waste heat solutions, and other efficiency initiatives. This creates a dynamic ecosystem where Bitcoin, energy, and technology converge, forming a new frontier in finance and infrastructure. Please pay attention. You see, as corporations build out these massive digital empires, Bitcoin is becoming an integral component of their financial strategy. It is not only a store of value and a hedge against monetary instability, but also a tool to monetize excess energy efficiently, turning previously wasted resources into productive economic value. This is the kind of innovation that positions Bitcoin at the intersection of technology, energy, and finance, all together in a perfect storm. An asset that is increasingly critical to both corporate strategy and global economic evolution. Now zoom out and look at Bitcoin adoption on the global stage. MasterCard recently stated that we are entertaining a new era of clarity and confidence with Bitcoin, signaling a growing acceptance by mainstream financial institutions. I mean, we're talking MasterCard here. Corporations are no longer viewing it as just speculative tech. They are treating it as legitimate money and strategic financing tool. And we're just getting started, I believe. And it's not just corporations getting involved. Luxembourg, the fourth richest country to now own Bitcoin, recently announced that it has allocated 1% of its sovereign wealth fund to Bitcoin. That is monumental. When a nation of that size and financial influence begins to hold Bitcoin, it sends a clear message. This is an asset worth serious consideration at the highest levels of government and finance. So what does this tell us? Bitcoin is increasingly being recognized as hard money, a hedge against inflation, the money printer, and a strategic asset for both individuals and institutions alike. Combine that with massive retail inflows and corporate adoption, and you have a powerful narrative. You see, Bitcoin is no longer niche or fringe asset. It's becoming a pillar of the new financial system. I hope you're paying attention. For hodlers, this is a very strong signal, like myself. The long-term fundamentals remain rock solid. Yes, the market may experience short-term fluctuations, but adoption is steadily growing, scarcity is fixed, and confidence is rising across the globe. Bitcoin is evolving from digital gold to a recognized global standard of sound money, and those who hold it now are positioned to benefit from the historic financial shift. So what does this all mean for you, the Bitcoin hodler themselves? You see, retail inflows signal growing demand in new market participants. Corporate investment and infrastructure shows technology and energy sectors are expanding in ways that complement Bitcoin adoption. Sovereign wealth adoption validates Bitcoin as a long-term store of value, and the lesson is clear. Stay disciplined, stay informed, and hold through volatility. Dollar cost averaging remains the most effective strategy for building wealth over time, especially with Bitcoin. You see, Bitcoin rewards patience and punishes panic. Short-term noise is just that, noise. The long-term trend is adoption, scarcity, and growing recognition as a strategic asset. Step back and take a look at the bigger picture. Across the globe, liquidity is flowing into new asset classes at unprecedented speeds. Investors are moving money out of traditional cash and low-yield savings into stocks, real estate, and increasingly, yes, Bitcoin. At the same time, technology is advancing at a record pace. From AI and cloud computing to massive new data centers that are reshaping the way we live, the way we work, and the way we transact. Meanwhile, nations are starting to hold Bitcoin in their sovereign reserves. Luxembourg, that's amazing. I can believe actually, a sovereign wealth fund is starting to create, and it's going to happen in all countries, I believe. Signals this dramatic shift in governments and how they perceive digital assets. It's no longer speculative, it's no longer hype, it's no longer fringe experimentation. It's financial planning. If you're holding Bitcoin now, you are part of a movement that aligns with these global macro trends, not just chasing short-term market gains. You are holding an asset that is scarce, decentralized, and increasingly recognized by both individuals and institutions worldwide. You see, Bitcoin is more than just digital money. It is a hedge against inflation, a store of value in an unstable monetary system, and a signal of financial sovereignty. It represents a form of wealth that cannot be diluted by central banks, manipulated by governments, or devalued by endless money printing. In a world of growing uncertainty, hodlers are not just investors, they are participants in a global shift towards sound money and economic independence. Now I want to hear from you. This is very important. Do you think global retail inflows, mega data centers, and Luxembourg's Bitcoin purchase will drive Bitcoin higher this year? Comment below and share your thoughts. I promise I read every one of them and I'll respond to you. Make sure to like, and again, please subscribe if you haven't already as I'm building this community, and share this video with someone who loves Bitcoin news. Well, that's your daily hodl. Stay sharp, stay disciplined, and as always, Lead.Pray.Hodl. I'll see you in the next one.